All right, before we jump in, let's get the important stuff out of the way. Just a quick reminder that this explainer is for your reference only. It is not, I repeat, not a recommendation to buy or sell anything. Ultimately, all investment responsibility rests with you, the investor. So, the AI revolution is here, and it is firing on all cylinders. But let's be honest, the obvious plays are getting pretty crowded, right? Today, we're going to look past the usual names and dig into a huge opportunity that I think a lot of investors are missing: the fight for AI memory supremacy between SK Hynix, Samsung, and Micron. And I promise you, by the end of this, you'll understand why the Korean players might just be the savviest bet you can make for 2026. Okay, let's just get straight to the point. I know what many of you are thinking. Nvidia's valuation? It's in another galaxy. Micron? Well, that feels like the safe, logical bet, because, it's a US company. So why on earth would a foreign investor even consider looking at Korea? That is the exact question we're going to tackle today. And to get you that answer, we're going to do a real deep dive. First, we'll talk about the new bottleneck that's quietly running the entire AI show. Then we'll look at the three titans fighting for control. We're going to put that safe American choice, Micron, under the microscope, and then I'll show you the hidden opportunity I see in the Korean market. I'll even share my own playbook for how I'd approach this trade, and we'll wrap it all up with a final verdict. Sound good? Let's get into it. First things first, to really get this, you have to understand that the rules of the game have totally changed. The real bottleneck in AI right now, it's not just about the GPUs anymore. No, it's about the memory that feeds those hungry GPUs. And that brings us to this little acronym, HBM, High Bandwidth Memory. Here's the best way to think about it. HBM is like the high-octane, specialized fuel for a Formula One race car. Your Nvidia GPU is the world's best engine, sure, but without this specific ultra-fast memory, that engine is just a very expensive paperweight. HBM is, without a doubt, the beating heart of AI data processing today. Now here's the kicker. This is the single most important fact for our entire thesis today. The demand for HBM is so insane that the entire 2026 production capacity from the only 3 companies in the world that make this stuff is already sold out. Just let that sink in for a second. We're not talking about a forecast or a guess. This is a fact. The world cannot get enough HBM. So who are these 3 companies that basically have a monopoly on the single most critical component for the AI revolution? Well, let's meet the titans of HBM. Now take a look at this chart. This is fascinating. This is not an evenly split race. Not even close. According to Counterpoint Research, SK Hynix is the undisputed king of the hill, with almost 60% of the entire market. Samsung is a very strong number 2. And get this, together, these 2 Korean companies control nearly 90% of the world's supply. Micron, the US player, is basically playing catch-up from a distant 3rd place. And this table, this is where the story gets really compelling. Just look at that first row, the forward PE. SK Hynix, the market leader with that massive share, is trading at a shockingly low 5.6 times forward earnings. Samsung's at 8.7. Now look all the way to the right. Micron, with the smallest market share, is the most expensive at 11.5 times. You're paying half the price for the company that dominates the market. In my 20 years, I've rarely seen a valuation disconnect this obvious. It's a glaring anomaly. So okay, let's talk about the elephant in the room for a lot of US investors, Micron. Is it really the safe harbor it looks like on the surface? And look, let's be fair. The case for Micron is pretty solid. It's based in the US, so you sidestep a lot of geopolitical drama. It's getting a nice boost from the CHIPS Act, and you can't sleep on their tech. They're making some real headway on the next generation, HBM4. It is a good company. No one is questioning that. But, and for an investor, this is a huge but. Here's the catch. You're paying a very steep premium for that feeling of safety. You're paying a higher valuation for the company with the smallest piece of the pie. And as an investor with a few gray hairs, that forces me to ask a tough question. Is that safety worth the price tag? Or is the real opportunity hiding somewhere else? And that brings us to the core of my argument today. For decades, investors have talked about the Korea discount. This idea that Korean stocks are persistently undervalued because of risk. But what if I told you that in 2026, that discount isn't a risk anymore? What if it's actually the opportunity in disguise? So look at these 2 columns. For most of my career, the standard view on the left was the whole story. Geopolitics, corporate governance, currency. Believe me, those risks are real. I learned that lesson the hard way during the Asian financial crisis. But here's what my experience tells me is different now. The risks on the left have been priced in, and then some. What we're left with on the right is a situation of deep undervaluation combined with new catalysts like the government's Value Up program. The question is no longer, are there risks? The real question is, are those risks creating a once-in-a-decade buying opportunity? In my book, they are. And we have to talk about liquidity. This is a massively underrated advantage, especially if you're managing serious capital. We're talking about a typical day where over $2 billion worth of stock changes hands in these names. That is world-class liquidity. It means you can get in and, just as importantly, get out of a huge position without moving the price. That is a luxury you don't find in many markets. So after doing this for 20 years, my winning formula has become pretty simple. I'm always hunting for the sweet spot. Deep undervaluation meets world-class liquidity meets direct exposure to a massive secular trend. And right now, as we're looking at 2026, Korean semiconductors are sitting right in the middle of that bullseye. All right, so if the why is making sense, the next logical question is how. How do you actually build a position around this idea and, this is critical, manage the unique risks that come with it? For me, it comes down to a simple 3-step protocol. 1, decide on your total portfolio allocation. How big is this bet going to be? 2, before you ever click buy, you must know your exit point. Set your stop loss. And 3, and please don't ignore this if you're a foreign investor, think about hedging your currency risk. A great stock call can still turn into a losing trade if the currency moves against you. I've got the scars to prove it. So, putting it all together, a sample portfolio might look something like this. You build your core position by splitting it between the 2 undervalued Korean leaders, Hynix and Samsung. Then you take a smaller, maybe 10% slice and put it in Micron. Think of that Micron piece as your hedge. It keeps you in the game with the US player just in case, while your main bet is on that massive valuation gap closing in Korea. Okay, let's pull all these threads together. Time for the final verdict and the key takeaways I want you to walk away with. Here it is, plain and simple. If you're a foreign investor and you want direct, pure play exposure to the AI memory boom heading into 2026, I believe the Korean market offers the absolute best combination of explosive growth, deep value, and incredible liquidity. So let's boil it down to 4 key points. 1, the Korea discount isn't just a risk anymore, it's a valuation opportunity. 2, do not underestimate the power of that deep liquidity. It's a huge advantage. 3, the smart way to play this is to diversify across the Korean leaders and maybe keep a small hedge with the US player. And finally, number 4, remember to think long-term. Building out AI infrastructure isn't a one-quarter story, it's a multi-year epic. And that brings me to my final question for you. Now that you've seen the data on market share, valuation, and the risks, which horse would you back in this race? SK Hynix, Samsung, or Micron? At the end of the day, the market is a survival arena. Smart, informed choices are what separate the winners from everyone else. I've laid out the case for where I think the opportunity is. If this deep dive helped you see things a little differently, do me a favor and hit that like button and subscribe for more. I'm really curious. Hynix, Samsung, or Micron? Drop your choice in the comments below. Thanks for tuning in.